You get hired by Intercam Banco on a Tuesday in March, and by Thursday you understand that the job description and the actual job are two different documents. Not in a dramatic way, not in the way that announces itself, in the way that things reveal themselves inside large financial institutions, gradually, through accumulation, through the specific texture of certain transactions that don't quite fit the stated business purpose of the clients generating them, through the meetings that happen in rooms you weren't invited into and whose outcomes appear later in your portfolio as new account relationships you're expected to service without asking where they came from. You are 28 years old. You have a master's degree in financial analysis from ITSO in Guadalajara. You have 2 years at a smaller regional firm where you learned the mechanics of commercial banking from the inside, the compliance frameworks, the anti-money laundering procedures, the suspicious activity reporting protocols, the Bank Secrecy Act obligations that govern the relationship between Mexican financial institutions and the US correspondent banking system. You know the rules. You were hired, in part, because you know the rules. What you will spend the next 4 years understanding is that knowing the rules and understanding why certain people find the rules useful are two different kinds of knowledge. The bank is real. Intercam Banco is a real Mexican financial institution with real clients and real commercial banking operations, and a reputation in the market for aggressive client acquisition and flexible relationship management. The flexibility is what you will come to understand as the actual product, not the banking services. The flexibility your client portfolio starts with 32 accounts, small and medium enterprises mostly, import-export businesses, a construction company, 3 real estate holding vehicles, 2 hospitality groups, a logistics firm, standard commercial banking relationships with standard documentation and standard transaction volumes that fit the stated business purposes within acceptable tolerance ranges. You review the files during your first 2 weeks and everything is in order in the specific way that files that have been prepared for review are always in order. The 33rd account arrives in your second month. It comes through a senior relationship manager who introduces you to the client in a conference room on the 4th floor. The client is a man in his mid-40s, in a good suit whose business card says he is the director of a trading company registered in Jalisco. The trading company imports consumer electronics from suppliers in Shenzhen and Guangzhou and distributes them through a retail network across western Mexico. The business is real in the sense that the company exists and the invoices exist and the supplier relationships are documented. You review the documentation that afternoon and it is thorough and organized and answers the questions that the compliance framework requires you to ask. You approve the account. Over the next 6 months, the trading company moves approximately 40 million pesos through the account in transaction patterns that are unusual in ways that your compliance training tells you to flag, and that your institutional environment tells you to manage carefully. Not ignore, manage. The distinction is one that you will spend a long time thinking about. Ignoring would be simple. Managing is the specific professional skill that Intercam has hired you to apply. The ability to process transactions that sit in grey areas through the compliance framework in ways that satisfy the formal documentation requirements while producing the outcome that the relationship manager needs from the client relationship. You file the required reports, you complete the required documentation. You note the anomalies in internal memos that are reviewed by a compliance officer who reviews them in the specific way that compliance officers in this environment review anomalous transaction memos, with enough formal engagement to create a documentation trail and not enough substantive engagement to produce an outcome that disrupts the relationship. This is the system working as designed, not as officially designed, as actually designed. Executives at Intercam were accused of meeting directly with suspected CJNG members to discuss money laundering schemes. ABC 7 Chicago, you are not in those meetings. You are 3 levels below the people who are in those meetings. What you are is the operational layer between the executive relationship and the transaction execution, the accountant whose name appears on the account documentation, whose compliance sign-offs are the formal basis for the transactions that the executives have already approved at a level you don't have visibility into. You understand this about 18 months in, not through a revelation, through a conversation. A colleague who has been at the bank for 6 years takes you for coffee on a Friday afternoon and says nothing specific and says everything specific simultaneously. He talks about how the bank works, about which relationships are structural and which are incidental, about the difference between the clients on your portfolio who are there because of the bank's commercial banking product and the clients who are there because of something else that the commercial banking product is the vehicle for. He uses no names. He uses no explicit characterizations. He is a man giving another man the information he needs to navigate correctly without creating any documentary evidence that the information was given. You drive home that Friday and you sit in your apartment and you think about the trading company account and the 40 million pesos and the transaction patterns and the compliance memos you've been writing and the compliance officer who's been reviewing them. And you think about the specific meeting that the senior relationship manager arranged in the conference room on the 4th floor and the good suit and the business card. You already know. You have known in the peripheral way that people inside systems know things that the system has not officially told them. The coffee is the system officially telling you. The question the coffee is actually asking is, now that you know, what are you going to do? You are 29 years old. You have a student loan from ITESO that represents 4 years of tuition your parents couldn't fully cover. You have a salary at Intercam that is 3 times what the regional firm was paying, and that has allowed you to move to an apartment in a neighborhood where you feel the specific pride of a first-generation professional who has arrived somewhere his parents couldn't reach. You have a girlfriend who is a school teacher and who thinks you work in commercial banking, which is technically true, and who asks sometimes why you seem distracted on Friday evenings, and to whom you say nothing specifically because there is nothing specific to say that doesn't open a door you can't close. You stay. The decision is not dramatic, it is the absence of a decision to leave, which in practice is the same as a decision to stay. The staying accumulates. Days become weeks, become the second year, and then the third. And each day of staying makes the leaving harder because the leaving at day 500 carries more exposure than the leaving at day 5, and you are past day 5. The Chinese network enters your operational reality in year 2. Chinese money laundering networks have emerged as the leading service provider to launder cartel funds. Cartels need to dispose of US dollars, and Chinese nationals want to acquire them due to China's $50,000 annual limit on capital outflows. Inside Prime, the mechanism is elegant in the way that financial mechanisms are elegant when they solve 2 problems simultaneously with a single transaction. The cartel generates cash in the United States that needs to move to Mexico. Chinese nationals in the United States have RMB in China that needs to convert to USD without triggering Chinese capital controls. The network matches them. The cartel's USD cash in Chicago or Houston or Los Angeles gets collected by a Chinese network intermediary and delivered to a Chinese national, who wants USD, the equivalent value in RMB, moves in China to an account controlled by the network. The network settles the balance with the cartel in Mexico through a trade transaction that appears commercially routine. Chinese money laundering networks utilize trade-based money laundering, money mule, and mirror transaction methodologies, and may recruit financial institution employees to act as complicit insiders. Center for Strategic and International Studies. You are not recruited in the explicit sense. You are already inside the institution that is already inside the network. Your complicity is structural rather than individually negotiated, which makes it feel different from what it is, and which will not make it feel different to a federal prosecutor. The trade-based transactions come through 3 of the accounts on your portfolio. Electronics imports from China, where the invoice values are inflated beyond the market rate for the goods described. Exports of agricultural commodities to buyers in Hong Kong, where the invoice values are deflated. The difference between the stated values and the actual values is where the money moves. Value transferred through the gap between what the paper says and what the goods are worth, a mechanism that has been used to move money across borders since international trade existed, and that remains effective because trade finance is inherently complex and the complexity is inherently difficult to audit precisely. Over $9 billion in suspicious transactions involve trade-based methods characterized by unusual funding behind exports and imports routed through East Asia, Mexico, and the Middle East. Northeastern Global News, your accounts are a small node in a network that is moving numbers at that scale. The smallness of your node doesn't diminish its function. It is a node in a system, and the system requires every node to function, or the network routes around it. You become technically expert in the typologies. This is the thing about financial crime work that nobody outside of it fully appreciates. The expertise required to do it well is the same expertise required to detect it. The skills that make you effective at processing the transactions are the skills that would make you effective at flagging them. You are holding the tool by the blade instead of the handle, and the difference is a choice that you made by not making a different choice on a Friday 2 years ago. The timeshare fraud arrives in year 3. Between approximately 2019 and 2024, approximately 6,000 US victims reported losses of approximately $350 million attributable to timeshare fraud schemes in Mexico. HST today, the scheme is operationally simple. American retirees who own timeshares and Mexican resort developments receive phone calls from people claiming to represent buyers who want to purchase their timeshare for above-market prices. The fee to process the transaction, the tax to release the funds, the regulatory payment. Each layer of the fraud extracts another wire transfer from an elderly American into an account that routes through a corporate vehicle, that routes through your institution, that routes into the broader financial network. The victims are specific people. They have specific ages and specific retirement savings and specific levels of trust in institutions that the fraud is impersonating. You process 3 accounts connected to this operation. You know what they are in the specific way you know things at this point in your career, not from explicit disclosure. From the transaction patterns and the corporate structures and the geographic origination of the incoming wires and the specific demographics of the sending accounts. Elderly Americans wiring $15,000, $22,000, $8,500 from community banks in Florida and Arizona and Pennsylvania. You file the suspicious activity reports. The reports go to the compliance officer. The compliance officer reviews them in the established manner. The accounts continue operating. FinCEN determined that a Cibanco employee knowingly facilitated the creation of an account to launder $10 million on behalf of a Gulf Cartel member. Executives at Intercam were accused of meeting directly with suspected CJNG members to discuss money laundering schemes. ABC 7 Chicago. These are the institutions whose internal architecture you understand because you work inside one. The executive meetings happen several floors above your desk. The operational execution happens on your desk. The distance between those 2 levels is not protection. It is the distribution of exposure that makes the system function. The executives have the relationships and the immunity that comes with seniority, and the institutional weight to manage regulatory attention. And the operational staff have the documentary exposure of the transaction processing and the specific vulnerability of being the names on the accounts. You understand